It is really, really hard to figure out where to start when you're trying to apply for a home loan, or if you're a real estate agent trying to coach one of your clients what to do to get pre-approved for a loan. So here's what I'm going to do for you as a lender of 35 years. I'm going to slowly go over everything that we typically ask for from an average client. Now, this isn't an exhaustive list, but it's enough to get you ready. You know, you might have clients that are in business for themselves, or maybe they're recently divorced, or maybe they filed bankruptcy, and your lender's going to ask for some more things. But this list right here that you're seeing on your screen, if you want to screenshot this, use it as a checklist. That's a great place to start. And I'm going to go through these things one by one. We're going to stay on this screen. We're not going to be scrolling to different screens. So we'll be on the screen for a while. Buckle up and let's talk about each one of these things. So first of all, if you're employed by someone else, meaning you get a paycheck, W-2, you're not in business for yourself, it's pretty straightforward. We're going to ask for the last 2 years of your W-2s. Even if those W-2s go into previous jobs, they may not even be in the same industry. You always want to get the last 2 years of W-2s. Right now, we're in December of 2025 when I'm shooting this video, so we would ask for your 24 and 23 W-2s. And at the beginning of a year, like we're coming up on the beginning of 2026, for the first few months, you're not going to have your W-2 probably until February or somewhere in that time. That's okay. The last two you have, that'll work for you. Your lender can coach you on what more they want. But here's the key: we want the last 30 days of your pay stubs. Very, very important. And we want to see the year to date figure and how your pay breaks down between overtime and salary or hourly, whatever. We want to see that, particularly the year to date figure is very important. Now, if you're borrowing, if you're watching this video and you're trying to apply early in a specific year, say you're in January and you don't have 30 days of pay stubs, whatever, you want to go back and make sure that you get the last pay stub of the previous year if you can, particularly if you're in the first few months of the year. Very important for a lender. If you can do that, I'm telling you, it's gonna really save a lot of time when you're going for that pre-approval. And let's talk about if you're self-employed though. That gets a little trickier, and people are scared of doing loans if you're self-employed. It's really not that hard. We've got several ways that we can get a self-employed borrower done, and I've specialized in it. I was a commercial lender in the past, so I'm used to seeing all of these options. So you want to get your last 2 years worth of 2 years of personal taxes. Start there. I want you to flip back to two sections. Number one, do you have a Schedule C as in cat? That's going to show if it's like a small business you might be doing on the side that doesn't have a separate return, or a Schedule E as an elephant. Now, the Schedule E has two sections. The first section typically covers rental property you may own. If you've got rental property, definitely include that. Secondly, the second part of the Schedule E is it's going to talk about any other tax returns that flow through. So if you've got an LLC or an S Corp that you own or have ownership interest in, you're going to want to include any tax return that shows up on that Schedule E. So 2 years of your personal returns plus 2 years of tax returns that show up on that Schedule E for each year. The lender's going to need it to really perform the cash flow properly and give you an accurate read. Now, also, if you're also probably going to want to get the year-to-date profit loss and balance sheet. This is pretty easy if you're in QuickBooks. You use QuickBooks, just go over to Reports, download the balance sheet, download the profit loss statement year-to-date from the beginning of that previous year, add it to those tax returns. Lender's probably going to have most of what they need. Okay, there are instances where you may not claim all of your income, and your lender, a good lender, will have options such as, hey, let's get the last 12 months of bank statements and try to cash flow it off of that. There are different things a lender can do if they're a good lender. So gather that stuff on this screen, and that will help. Also very important, we're going to want to see that you have the money in the bank, or you have the ability to get the money to be able to put for down payment. Not only down payment, so say, hey, I want to put 3.5% down for an FHA loan. Great idea, but you're also going to have closing costs. And we also look at something called reserves, meaning we don't want you to use your last dime to buy that house, and then all of a sudden you don't have money to make your first payment or go out and buy drapes or a vacuum cleaner. We want to see that you got a little bit left over. Those are called reserves. So down payment, closing costs, reserves. Now, there are tricks that lenders and realtors can use. Maybe they work with the seller to get a credit from the seller. So, hey, maybe I'll donate X amount, 3%, $1,500, whatever, towards your closing costs. That could really help as well. You might get a gift from a family member. That's allowable, and your loan officer will shepherd you through that process. But the big thing, make sure you're getting 2 months of your bank statements, brokerage statements. Don't think. I'm going to go off on a tangent here. Don't think that just because the lender doesn't need to see it that you don't want to provide it. Because what we do is we take the application at the end and we run it through a system called the automated underwriting system, to where it directly connects with Fannie Mae, Freddie Mac, and we get an electronic approval, so to speak. Very, very important, because most lenders want to see that approval. So the more that you're putting in there as far as assets, even if it's stuff that you don't think we need, put it in there, because the more you have, the better that scoring is going to be. Very important. Good tip. Also, make sure you don't redact anything. Don't cross out account numbers. Put in all the numbered pages, even if it's blank or irrelevant. Put it all in there. You don't want to redact any of these documents that you're giving to your lender. Very important. Another tip on the bank statements. Fannie Mae has a rule that if you're making a deposit any more than 50% of your monthly income, they have to, by rule, what they call source it, meaning they have to get a paper trail of where that money came from. Mostly they're concerned with, did you borrow that money? Did you take out another loan that you're not telling them about? They want to see where any large deposits are coming from. So be prepared to work with your loan officer on that. Driver's license, pretty straightforward. Take a picture of the front and back. Make sure you get all 4 corners of the document. Particularly if you're in a state like I'm in Florida and there's a hologram over part of it that obscures some of the lettering. If you take a picture, make sure you get an angle where that hologram, or it's not obscured. There's no reflections on there to where they can't read it. Take a picture of the front and back. PDF ideal, but a picture usually will work with most loan officers. They can convert it for you. Do you have any other properties? Sounds really weird, but when they do the debt to income ratio, they're going to want to see the mortgage statement on any property that you have, the most recent one. The rules state that they have to be able to prove that you've paid the last 12 payments. They're going to want to see a 12-month history on that. Sometimes the credit report will report most of that, but they might have to come back and say, we need to show that you made those payments. So we need canceled checks, bank statements that show that it went through. Don't be surprised if that happens, particularly if you're renting from an individual. They need to be able to prove that you've made your housing payments. That's rent or purchase if you're buying a home. And that's for all homes that you may own. So if you own multiple homes, they're going to need the 12-month history on all those homes. Usually, that's the rule. So be prepared for that. Sounds crazy, but that's true. They're also going to ask typically for the homeowner's insurance and flood insurance if that applies, and the tax bill. And you can always get that from typically your county tax online tax estimator or tax collector's office. They could usually download that, and the lender could usually do that for you. You're going to want those. And the mortgage statement is going to show if those payments are actually escrowed in with the payment. Very important that you do that. I know it sounds silly. They ask for it 100% of the time. It's just the way it is. Also, if you're under contract for a property, and you can work with your lender and your realtor on this, but you're going to want to be able to get insurance quotes. Very important, because the lender's got to know how much the cost of your insurance, including flood insurance if you're in a flood zone, they need to know what that's going to be to apply it to get you actually approved. A lot of counties, like I'm here in Florida, almost all the counties, if you go to the property appraiser site and say, hey, I'm buying 123 Main Street, enter it in there, enter the price you're paying, whether you're homesteading it or not, it will estimate your taxes. Very important, and most realtors and most loan officers really don't hammer this home enough. Whatever the current owner is paying for taxes, that was their payment. Keep in mind that they're going to reassess that property after it changes. Your property appraiser is going to reassess it after it changes ownership. When that happens, maybe 18 months down the road, your taxes could skyrocket. So please be really careful of that. That can give you a serious payment shock that you're not expecting. So if you haven't been told what that estimate's going to be, ask your realtor, ask your loan officer. Critical, very important for you to know. Also, when you make your earnest money deposit, meaning I'm under contract and I'm going to put $5,000, $10,000, $1,000, whatever you're going to do down, you want to be able to track that. So if you're putting in a wire transfer, keep the wire transfer paperwork. If you're writing a check, make sure that you get the bank statement showing that that cleared, maybe the front and back of the check that you wrote. Whatever you need to be able to create a paper trail, and that's not just the receipt that they give you at the title company. They're going to see where that money came from. Okay, and only use accounts that you have disclosed to your loan officer to make these deposits. If that deposit comes from another account, mark my words, the underwriter is going to ask for a copy of those bank statements too. Okay. Bonus, very important. Now, if you're watching anytime after the end of March of 2026, this may be irrelevant, but if you're watching before that, Congress just passed a law that a lot of brokerage companies have been fighting for, to outlaw the sale of your information. So whenever a lender pulls your credit, the credit reporting agencies have been selling that information off to telemarketing companies. And mark my words, your phone will explode if you don't do this. And when I say explode, 50 calls in a day, maybe even more. It's horrible. They call them trigger leads. So it triggers the sale of the fact that somebody's pulled credit on you for a mortgage. Ding, ding, ding. Every realtor, every lender, every insurance company, every alarm company under the sun is going to telemarket you almost immediately, trying to get you to work with them. So if you don't want that to happen, at the bottom of the screen, opt-out-prescreen.com, that is the official site for the 3 major credit reporting agencies that they've created to opt out of that marketing. And you want to do that 4 or 5 days before that credit is pulled. So when you first start the process, do that even before you do the application. Very important. Start that clock ticking to where it opts you out of that and they won't sell your information. Trust me, it'll make you much happier. If you have any questions, put them in the comments down below or reach out to me directly. I'm happy to answer them. But if you screenshot this whole screen, that is a really good laundry list of the items that you're going to want to collect in order to prepare for your home loan. So great talk. Let me know if you have any questions, and hope to see you soon.